derivatives, etc. They will just have to use their tag and get the relevant information. In terms of international financial reporting standards for SMEs, there is a feeling, according to ACCA's research on financial statements in 2016, that IFRS for SMEs with adaptations to the national needs, to the market needs, would be taken up. So in all the financial statements in 2016, it appears would be much more longer, much more complicated, much more complex, even though there are efforts being made to make them much more concise and much more simpler. So that is the financial statement in 2016 and how will it look like. At ACCA, we feel that the capacity building in terms of the knowledge of financial reporting standards is extremely important. And for that, ACCA has come up with a diploma in international financial reporting, which can be taken by professional accountants, analysts, investors who are desirous of updating their knowledge on IFRS and who want to seek the knowledge of IFRS. Because one of the main challenges that ACCA research shows is that IFRS do change very quickly, and there is a lot of theoretical and philosophical and academic debate around their relevance. But one of the challenges to adopting international financial reporting standards and going for much more standardization of information, which is essential, has been the capacity. And for that, one of the ways in which ACCA is helping the business community overcome that challenge is through the Diploma in International Financial Reporting. And then it has its certificate in International Financial Reporting. The Diploma in International Financial Reporting, you just have to take 1 3-hour exam. And the information about it is on ACCA's website. The certificate in International Financial Reporting Standards is just online. You can study online and give the exam online. So this, in a summary, is some of the research. I do understand not being able to see you all. That's created a bit of a challenge for me, and not being able to even you see me is also a bit of a challenge. But this, in a nutshell, is about international financial reporting standards, and I'm sure you do have the presentation, so do have a look at it and do visit ACCA's website for more information. Thank you. Thank you very much. It was a pleasure talking to you.
Afra, thanks a lot. Can you hear us? Just tell them she has finished. Her talk is finished. Hello, Afra, are you there? I think.
Hello?
Huh?
Red
No, to me. Huh?
can be black.
Which one? For this pen? Yeah, sure. Normally, this is more readable.
People in trading, they are not even able to visible.
Oh, okay. Then we'll use black.
You want
Okay. Am I on host? No?
you can speak.
Hello. Can you all hear me?
सर कनेक्ट किया वापस इसको आवाज नहीं
Hello. Can they hear me?
अच्छा एक काम करो चंदू को होस्ट पे रख दो हाँ
All right. So we are now discussing, and thanks to Jaipur's request, we are moving to black color. इसमें क्यों नहीं आ रहा? Screen दिख रहा है? Okay, let me try. See.
she's through now you can speak
Yeah, I'm speaking. No, I was just saying that corner screen should it have anything? Not an issue.
okay you don't want that
No, it's okay. I'm saying कुछ दिख नहीं रहा है उधर. So text. So we are talking about multiple acquisitions done prior to the business combination or acquisition. And that's where we are coming from. So moving forward, because optional exemptions, etc., can detail be covered in a longer course. Today we have 4 hours limit, and I think we are already at what time? 4:45. Okay. Moving on to the mandatory exemptions, hedge accounting is important. And now we go to the more complex aspects of the IFRS. Revenue, we know normally the gross inflow of economic benefits during the period from goods, services, interest, royalties, dividend. Now there can be hundreds of slides on IFRS, but I am going to pick up cream slides and then go about it. Some of the cream slides, let me put them here. I hope it is readable. What is not clearly visible under the Indian standards? Sale or return transactions are very regularly, and I am tempted to use the word manipulated, for booking the sales and jacking up the revenue by creating interesting contract clauses. Barter exchanges are quite common for non-recording. Reward points are hidden, and IFRS forces it to be shown and provided for. Many of the, I have seen it in many companies which supply switchgears, transformers, and complicated electronic machineries. And those machineries are supplied, installations are not done for years and years. And then still the revenues are booked, which is incorrect. That's what IFRS says. Then we come to some kind of transactions where warranties and maintenance costs are built up. Let me give an example. Suppose I am selling an air conditioner, and the air conditioner is costing, the sale price is 10,000. Very frequently companies are coming up with the schemes saying that purchase the air conditioners with 5 years annual maintenance free, right? And indirectly what they are doing is that they are jacking up the revenue by 50% extra. IFRS doesn't allow it, because what in the name of air conditioner, what we are selling is really the maintenance contract, and the maintenance service will be delivered for 5 years. So the revenue cannot be booked just like that, and that's what one needs to take into consideration.